flexible inflationary targeting. Okay. Now, what do you mean by flexible inflationary targeting and how it is different from trend inflation? See, flexible inflation targeting means Government of India will interact with Reserve Bank of India, will discuss with Reserve Bank of India, and it will try to fix one inflation rate which is little bit flexible. That is, for example, as of now, we have fixed around 4 plus or minus 2%, which is flexible, which comes around 2 to 6%. So the central bank needs to follow or needs to maintain this percentage of inflation in the market. This is called as flexible inflation targeting. Now, this in the year 2016, okay, the government has amended the Reserve Bank of India Act, RBI Act 1934, okay, that once in every 5 years, you are going to revise your target for the inflation. Okay, so earlier it was around 2015, which ended in 2000, 2016 to 2021. Okay, and which was somewhere around 5th August 2016. We made it for 5 years, so it will end somewhere in March 2021. So this phase we are done. In that phase also we have targeted in and around of 4%. 4% only. Now, even in this year also, we have revised it for 5 years again. So this is again for 5 years, which starts from 2021 to 26. The Government of India and RBI has fixed this inflation rate at 4%. Okay, with the tolerance limit is there, like lower tolerance is 2%, upper tolerance is moreover it is 6%. So this has been done for every 5 years and we have fixed it. And anyways, this 4%, 4 plus or minus 2 is definitely linked with your CPI, Consumer Price Index. Okay, because earlier RBI used to link it with the WPI, which considers only goods, and CPI is directly linked to the retailer and the consumer, which includes both the goods and services. So now RBI considers the CPI in the calculations of the inflation rate in the market. So this is called as flexible inflation targeting. Now earlier we used to have trend inflation. See, trend inflation means long-term inflation. Trend inflation means the long-term inflation, which the government of India used to fix it. I mean, like prior to 2016. Okay, prior to 2016, that is before the flexible inflation targeting FIT, you used to follow trend inflation. In the trend inflation, you used to go for long term along with the high inflation rates. So along with that, you used to go for high inflation rate that was in the range of around now 8 to 9%, but was for long term period, and you only used to revise it now, which has fallen down to 4% in and around, which could be revised within the 5 years. So this is the difference between what is flexible inflation targeting, which is for the short term and which is revised every 5 years by amending the RBI Act 1934 and which has linked to CPI. Trend inflation is nothing but the long term inflation targeting. Prior to 2016 we used to use, and we used to have an high inflation rate somewhere around 8 to 9% or more than 9%. We used to fix it. Now the next topic for today is inflation tax. I think this is fourth